he he said there's a lot of sisters who are struggling in the community. They're single moms. They live on their own, taking care of their kids and whatnot. And there could be a way for them to make some um, extra passive, income without kind of, leaving their full-time jobs and stuff. And that's kind of exactly where my head is going with this, as well as helping the young people to learn about other ways to make money and, help themselves, their communities, and their families, and become investors. So we can maybe explore investing club later, or see if those who are underage and can't open accounts on their own, if we can figure out a way with Ilya to help with that, inshallah. So with that, I'll turn it over to Karim to see if you wanted to add anything else and kick us off.
Jazakallah khair, brother Ayman. I know I know the bike rides and all that were all good. I still remember those days. But inshallah, we'll get right into it. So like this inshallah is gonna be just like a introduction of what we have for the upcoming weeks. Inshallah, if this does, like Ayman say, it worked out for some people and more people are interested in it. But basically today I'm just gonna start with 13 introductory steps that I would say to like give an idea to the audience of what this is and how people can capitalize on it. And I'm gonna first start with a topic called the process. So inshallah, like anything that you do or anything you have your mind to, there's always gonna be a process of it, and you have to. You're not gonna get to where you want to be at exactly right when you start it, but you have to put in the time and the effort to actually in the work to actually get where you want to get to and where you want to be. So what I mean the process is, so say like a computer. So when you build a computer, it starts with the CPU, starts with the core, and then you add the memories and the hard drives and all that, and the motherboard is what basically connects everything together. So basically, that is the process of how you display and see a computer. And a lot of people, they just see that people are making money, and they just see them doing that. It's like, oh wow, like I want to do like them, but they don't see the processor. They don't see the memories that it holds, that it takes for a computer to actually be operating. You just see the computer screen. So if you actually want to be into this, actually want to be focused, you have to be laser focused, and you actually have to have set goals that you want to accomplish and that you actually want to be successful in this. So with that being said, I'm gonna move on to my next topic. So there is a big part of this that is the main reason of what we that people are successful in the markets like this. The rich people are rich because they have all their money in this market. So they are rich because they have anticipation. So what I mean by anticipation is basically they are ready to capitalize on an opportunity, and they know how to manage their capital. So what I mean by manage their capital is they don't go all in into a certain thing, and they don't go very little. They know how to expand. They know how to have their portfolio equal, and they know how to use it the right way. So say you have $10,000 that you can invest, and you're willing to invest that's for free or something, and then you're just wanting to toy around with. So you shouldn't put all 10,000 on one thing. You have to spread it out, and you have to have the opportunity to come to you. So say you put 10% of your portfolio on something that you think is a really good opportunity, and that you want to do on that. So there's 10%, and then there's 5%. So if you go more than 10%, then you're doing something wrong. So if you have 5%, then you're very sure, but you're also you're more willing to take a more of a risk. It's a stock, or it's a currency that has opportunity to fall lower, but you think it's the point where opportunity where it's a good time to buy, and that it will be good to make some profit from that. So you have to have anticipation. You have to always be ready, and you don't go out and look for the opportunities. You let the opportunities come to you. And what I mean by that is you have to write a set rule, a set trading plan. And what I mean by a set trading plan is you have to know when to enter and when to exit. So when you enter, you have to identify when it's a good time. If say you use certain types of indicators, and we'll talk about more indicators in a little bit later. But basically, you have three indicators that you want to use. If they all match of what you want to accomplish, then that's when you enter and that's when you take a trade. And then also, when there is panic, that's the good time. That's when it's a good time to buy. And when there's happiness, and when there's people that are going crazy, they're like, yeah, this is gonna keep going up. More people are buying, more people are buying. That's when it's gonna drop a little, and it might also go up in the future in the long run. But also, you have to always manage to take some and also leave some. So you have to understand that. So say you put $1,000 onto one thing, and it's 15 cents a share or something like that, and then it goes to 30 cents, right? So what you could do is that means you made 200% profit. You doubled your profit, and what you would be doing is you could take half your shares and put it back into your bank account. And so basically, you made your $1,000 back, and then you're letting that $1,000 ride freely, and it could keep growing as whatever long term investment that you have or short term. So that always plays a role. So you got to always be aware of when to enter and when to exit. And then I'm gonna go by so everybody can see my screen, right?
We can, yeah. There are a couple of questions that also came in. Karim, would you like me to share them now?
Uh, uh, yeah. Let's share them now.
Okay. So first question is when you talk about panic mode and people, it's a good time to buy. So the question is, should people invest now, and why is it a good time to buy during panic mode?
So right now, I would say it's still not a good time because I still see a lot more. Well, me personally, I just it doesn't like it's very unhealthy in the way that it's falling right now. It looks like it has a lot of room for it to keep falling. But I think sometime around August, when people just lose hope and they're just like they're not even thinking about it, I think that's a good time when it's really a good time to capitalize. So August is definitely a good time to look around. But also, the reason that there's panic and that there should be buying is because they're gonna be at very cheap, and you're probably not gonna see these prices again. Just like in 2008, there was also a recession that happened, and the Dow Jones is the biggest index fund of America, and it was at around it went to down to around like $8,000, I think, something like that a share, and we'll probably never see that price again because each market, how it goes is when it reaches a certain peak, it makes a lower high. And what I mean by a lower high is when it drops lower than what it was before. But comparing it to the last drop of the depression in 2008, it's gonna be higher than that drop. So when I mean by lower high, it means it went lower, but it's still a lower high when it dropped compared to last time. So I'll explain that a little bit when we get on the charts. But basically, just keep in mind of a lower high. So what I'm saying is right now is there's opportunities to capitalize on right now. For example, like soap companies, web development apps, or like Zoom, for example. That's a very good opportunity to capitalize on. I had a couple written down. Also, Amazon just employed a million extra employees, right? They because everyone's ordering their stuff online. Everyone's scared to go to the stores. They don't wanna get in the way of that. So they employed a million extra people. So that also is like they're looking over to take over big time. And also places like Costco and Walmart, they're also of people because their growth is getting a lot faster than they anticipated during this time because a lot of people, they're looking for their toilet paper, they're looking for all that stuff that people are struggling to find right now, and times are getting slow. But for them, the big companies, they're going to get bigger, and the smaller companies, they're going to get smaller. So that's just how it is right now, and that's how the economy is looking. So you know how a lot of people say the rich get richer and the poor get poorer. Well, that's kind of with this epidemic right now. That's kind of what's happening. And so okay, so let's get on to. I'm gonna get onto this website. So right here, I'm on Baby Pips, and so this is website teaches you everything about reading a graph, seeing what works and seeing what doesn't work. how to understand when what patterns are and all that. So if you go right here and you go to education, you can do this right here. You can click on how to trade forex, right? And then this, so basically just saying
So
forex.
Kareem, there's a question here. If you can explain what Forex is like in 30 seconds and
Yeah,
what
so
FX means.
yeah, okay. So sorry about that. So I was talking more of a big picture, but just to get in specifics. So forex is basically it's basically the whole foreign exchange market. So it's basically it's filled with 5 trillion dollars per day. So per day, that's how much money it goes around and comes around in that market. So that's basically the whole world market and the market of exchanging forex. So say you have a U.S. dollar and you have a European a euro. So the price for exchanging a U.S. dollar with a euro is different on one day than when you exchange it or on another day. So say you go to Europe and you say I only have dollars and I need to exchange it to euros so I can buy what I want to buy. So maybe one day it's $1.50 for 1 euro. And then the next day, when you come to change it back in from the extra euros that you had to change it back to dollars, you only get $1.25 for every euro. So banks and markets they change frequently to adjust on how the market is going and what is happening with the market. So some days it's going well for Europe, and some days it's going bad for the U.S. dollar. So those days the U.S. dollar would drop, and the European dollar would go up. So basically, there's a difference in times, and there's a lot of times where during certain months certain currencies go up, and during other months certain currencies go up as well. So so Indonesia. So there was so I was reading about something. So there was an area there's three countries that sell soybeans or something like that, and there was like a certain year where cicadas came out and they usually destroy the soybean farms. And Indonesia was the only country that didn't have a cicada outbreak. So it would have been a great time to invest in the Indonesian currency because their soybean farms were going to exceed their growth, and they were going to be the only source of soybeans. So those are certain types of things that you kind of have to like have in mind, and that's like kind of the mindset that you want to have. So basically, with the forex market, so we obviously don't do margin trading or we don't do any of that because there's honmanea in that. But basically the ways that we capitalize on it is we go to certain areas and we actually exchange those certain currencies during those certain times when it is a good time to buy. So if you look at right here, so this is called the school of pipsology. So basically pips, the definition for pips is points and percentage. So we'll get into that later, but it's just the amount of, so say you buy $100 worth of Canadian dollars, and one US dollar is 50 cents. So every 10 millicent, I would explain it, would be 1 pip. So basically when you do that, so basically when you get 1 pip, that's basically 1 point of profit. It's more to it than that. But if you're basically getting 50 cents, then you would basically profit one, if you're using $100 and $1 is 50 cents of a Canadian dollar, then basically if it goes up by 1 millicent, then you would have made 1 cent from the $100 that you spent. So we'll get more into that later. But I'm just gonna explain to you what this is, what Baby Pips is. So basically, this has a full course from preschool all the way down to graduation, and this basically shows you the whole blueprint of understanding what the forex market is, what the whole market as a picture. So basically, learning anything about investments and products like that, they all tie into the same way. So learning this doesn't mean that you only have to do forex. You can also invest in the stock market. You can also invest in cryptocurrencies, and you can also do all that. So this has a full from preschool all the way down to undergraduate. So I would 100% recommend you to go through this. It's gonna take a while. It's a lot of information to take in, but there's certain ways and there's certain patterns that it teaches you to help you understand what is happening with the world and when is a good time to buy, and it matches and it helps you create a good trading plan. So after Baby Pips, another website that I use as well is this Trading View right here. So this Trading View is basically a website that platforms the whole picture of anything you can think of. If you want to invest in anything, then this is or it not it doesn't it does it's not an investing application, but it helps you read the charts and it has all the indicators that you need, and it shows you right here. So as you can see, the S&P 500 and the Nasdaq, they're both down 4%, which is not good. And the Euro USD is up 1% or 0.01%. Oil is also down 15%. Gold is up 1%. It's kind of weird that gold is up right now because gold is tangible and you can hold it with your hands, and it's the only thing that's coming of value right now. And also Bitcoin and US dollar, that's also down as well. So basically the whole market is down except for gold. So after Baby Pips and Trading View, I'm gonna show you a quick way of how to kind of show you a perspective of how to read charts and all that. So I'm gonna go on one of my favorite cryptocurrencies right now because it's at a very cheap price. It's around 15 cents a share right now. So 15 cents a share, I mean, like that's not like if you put in $1, you have like around like 4 shares or something like that, right? So so if this will let me go through, but basically I'm gonna show you how I look at charts and how I kind of identify when it's a good time to buy and when it's a bad time to buy. So if it could let me, it's not letting me access the chart. If we give it a second really quick. Okay, so
So while Karim is doing this, pause here for any questions. You can also type your questions in the chat. There were a couple that came in earlier, but you can also unmute yourself and ask a question if you have any.
I'm trying to pull up okay, there we go. I pulled up the chat right now.
Yeah, they were sent privately. I already shared them with you, Karim.
Yeah. Okay.
Maybe one term you mentioned, just if you can expound on it a bit before you jump into this next demo. Use the word margin. Can you explain what you mean by margins and why are they not halal?
So basically, margins, they're not halal is because you invest. So say you put in $150, right, and you try to trade a certain thing. So what it does is it doesn't take away any of your money. It doesn't take away any of your account holdings, but basically it basically lends it to the banks or it lends it to the brokers that you use or give it to. And what that does is it's you're not using your actual money. You don't own anything. So because you don't own anything, it's haram because you have to what you have to do is you have to have it owned by yourself and you're actually trading it. It has to be in your hands or you're holding it as like your personal like assets. So the reason it's not halal is because margin trading is not it's basically just a lend. It's just a lending. It's not actually what you own. So you guys got to be very careful with that and only invest in stuff that you own. And anyways, the problem with margin trading is the reason that it makes sense that it's haram is because when you're the reason that you can make a lot of money really quick, but you can also lose a lot of money really quick. So like it kind of loses value of towards money or some sort, if that makes sense. So make sure to be very careful with that and just be aware that you want to always invest in stuff that you own and not that you're lended to. If you could touch up on that a little bit, Ayman, or if that was a good explanation or not.
Jazakallah khair. No, great explanation. I mean, basically what Karim is saying in Islam, you have to own something to be able to sell it. So the way margins work is you sell some stock before even you spending that money. You basically buying a contract saying, hey, in the future, if the price goes down, I'll buy it. If not, then I'm okay losing the contract money, which is a smaller percentage of the total sale. And that's where that risk comes in that Karim was talking about. A lot of people make big money in the stock market using options, but as Muslim investors, we just buy actual stocks. We don't buy options or contracts of options.
All right, so now that I'm on this full future chart. So as you can see on the top left corner, it says XRP USD, right? So there,
I
so
don't think we see your screen anymore.
you don't see it. Ooh, okay,
I can't see it.
okay, hold on. Let me try to get that back. Okay, is that better?
It's coming up. Yep.
Okay, is it? Let me know when it's back up.
Yeah, we can see it.
You can see it. All right. So as you can see on the top left corner, it says XRP USD. So this is Ripple. So basically, Ripple is a company that helps making transactions between banks and globally a lot easier and a lot quicker. And so the reason I like them is that basically, if cryptocurrencies are ever successful, XRP will definitely play a big role in that. So right now, as you can see on my cursor, it says 14,943, and it's going lower right now. So basically if you spend 15 cents, that's for every dollar. So XRP. So say you buy $1 worth, that means you'll get around 4 to 5 shares of XRP. And right now, the reason I'm going to show you why I like it so much and why there's potential growth for it. So even though it's dropping right now, it's still definitely a good opportunity to grow for the long term. So what I'm gonna go to do, so what I always do when I when I look at my graphs, or I look at the market, I always start with the bigger picture, right? So I'm gonna start with the 1 month, with the 1 month candle, right? So what I mean by candle, so each one of these, this can load. Sorry, it's taking a while, but basically I start with the 1 month, and I build my graphs through there, and I chart it up. So if I can zoom in right here, so this shows 1 month. Oh, it's not letting me zoom in. So as you can see, this is from the beginning of time that it started until now. So it started around 2017 until what day we're in. We're now in 2020. So in March of 2020. So basically, I don't know why it's very slow right now.
So candle is one of those vertical lines, right?
So one candle is one of those vertical lines. So if I can, Phil, let me zoom in for some reason. I don't know why it's not letting me zoom in.
And those lines are the maximum and minimum price for that given day,
For that, so it
correct?
depends. So if you choose the month, each of those candles is a whole month. And then if you go to, so say you go to a week, each of those candles will drop down to a week. So
Okay.
okay, so hopefully it'll let me zoom in a little bit. I don't know why it's very slow right now. I think it's because I'm in my basement. It's like the internet is a little bit slower, something like that. This coronavirus got everybody using the internet. All right.
Yeah, they're seeing like 30% increase. That's another maybe a sector that you can invest in,
Yeah,
Comcast and the Verizons.
yeah, definitely. Okay. Okay, bismillah. All right. So basically, it's not letting me show it right now. But basically, how I chart it up is, as you can see, the potential. So it started from 2017, and we're in 2020 right now. So as you can see, the lowest point that it went to was around 11 cents, right? So it started at around 10 cents, and then it went all the way. It went all the way up, excuse me, to $3.30 a share, right? So that shows potential growth right now. So it went from 10 cents to $3, and then it dropped all the way back down. And right now it's around 15 cents a share. So that obviously shows that potential for it to grow. So if it started at 10 cents and it went all the way up to $3 during the last cryptocurrency bull trend, so so the bull trend was when it was in 2017 when it first started, and usually that's how markets usually are. So when they first start or they first come out, they usually have a big surge upwards, and then they drop down to fill in the gaps in between, so it can grow healthy. So basically, right now it's at 15 cents a share right now, and it started at 10 cents, and we already saw the potential that all went up to $3.30. So you buy one of these at 15 cents, and then it goes up back to up to $3. Then look at the potential for that. Like there's an opportunity, and it's at a very cheap price right now that has a very good opportunity that you can capitalize on, and you don't have to use as much capital and as much as comparing to how much you could potentially make in the future. So if you want to do the percentage for that from 15 cents to $3.30, you could do the math for that. But I'm not gonna go ahead and do that. But if you want, you can go ahead and do that. But stuff like that. I wanted to show you a little bit more of how I mark up the charts and how I see when it's a good opportunity, but it's not letting me zoom in. So I guess inshallah, maybe in the next one, the next webinar that we have in the future, I can definitely go ahead and show that. But yeah, basically what we look for is we look at prices when they're at a lower high or at a very cheap price, and where we can is a good time to invest. So right now, me personally, it being at 14 cents a share, I would say it's a good time to invest right now, just because it's a very cheap price and the potential that it has is very good, and it's very and it has a lot of opportunity for growth. And then going on to my next topic, we're going to talk about journalizing. So obviously, no one's going to be perfect in this market or any market or anything you do. You're not going to be perfect. So what you have to do is, especially in the beginning of your investing careers, what you want to do is you want to always journalize what you do and what positions you make. Not just because you want to see what you did, but you also want to kind of see how far you've grown and see what works for you and see what doesn't work for you. So when you journalize, that helps you understand, and that helps you create more ideas for yourself to understand. It's like, okay, I did this last time. What were the pros? What were the cons? What can I do next time? What can I make better? Because the market makers, or should I say the people, the banks, they're the ones that they don't want everybody to grow rich, right? They want to stay rich, and they want us to stay, happy, but not as to their level. So what we have to do is we have to outthink the market makers, and we have to think like that. We have to think like, okay, we're the people, we're the retail traders, but we want to be like, okay, what would they do during this time? What would we do? What would we do to capitalize on that? So right now it's a cheap price. Everyone's saying, oh, it's gonna keep falling. It's gonna keep falling. But right now it doesn't really have that much room to fall. And if it does fall 5 cents or 10 cents and it goes to 0 cents, you lost 15 cents. I mean, that may seem like a lot, but if you're just trying out, if you're just experimenting with yourself, a 15 cents loss is a lot better than a lot worse people have made losses in the past. So just to say like that, you have to always think like a market maker and not just a trader for your personal use. You have to think like a bank. You have to think of like what do the big players do so you can be successful in this field. So you have to always research, and you have to always make sure that you're doing the right thing, and to always back test and practice your your uh, your your indicators and stuff like that. So getting on to my next topic, just like how we talked about earlier, is you have to be able to perfect your own trading plan. So when you start with a trading plan, what I mean by a trading plan is you have to understand what risk management is. You have to understand what setup and what indicators you use. So there's a bunch of indicators, right? So if I can pull up the indicator tab right here, let me see if I can try to refresh this and it'll help a little bit. So basically, indicators are there are certain types of tools that the banks allow us users and us investors to be able to use to help read the charts easier. So what the charts the indicators that I use are only two. I use the relative strength index, which is RSI, and that shows how weak or how strong a certain share or stock is. So when you identify if something is weak, that means you know that there's not a lot of liquidity going on, and that bankers are trying to get more people to buy it. and that would be a good opportunity for it to be bought. If it's too strong, that means it's probably at a high point and it's gonna start dropping down at like a sooner or later. So when the relative strength index is weak, that's when it's a good time to buy. When it's high, that's when you, if you're owning a share, that's when you take partial some of your profits, and then you keep moving on from there. So hopefully it loads back up. I don't know why it's taking very slow, man. But yeah, so make sure to always think like a market maker and think like a bank. Don't think like a just like a normal person that is just like from a day to day person that is just doing this just for the fun of it. You have to it's a thought process, and you have to be very focused, very laser focused, and making sure that you're doing the right investments, and you're expanding your portfolio, not with one thing, but you're spreading it out with a couple of the right things that are for the future, inshallah. All right, and then I wanted to show a little bit more, but it's not really letting me. It's not really allowing me, so I can't really like show much of it. But basically, what you also have to do is, now that I said like there's like you have to always protect your own. You have to make your own trading plan. You also have to be able to read the charts. So I wanted to teach you how to read the charts, but it's not letting me, as I said. And maybe inshallah, hopefully next webinar we have, it could let me do that, because that would have taken up some time. But basically, also a topic that I wanted to say is you have to always keep up to date with news. So news is very important. The news that I use is CNBC, and the reason that I use that is because they show all the news that's happening around the world, and it shows. It usually is one of the it has usually the best investor banks that speak into it, and they usually have the news like first come. So I always download the CNBC app, and they're usually good with that. I mean, any news app is pretty fine, but just make sure that you're up to date with news and you're seeing what's happening around the world, because not just for your personal reasons, but also just knowing what's going on in the world is also good for you, and to know, and for the whole world. So my next topic, as I wanted to say, is from creating your own personal trading plan and reading your charts, you have to be able to master your craft. And what I mean by mastering your craft is you have to always back test your ideas, and you have to be able to understand that, oh, okay, something is working for me and something is not working for me. So I'm gonna do this, and for next time I'm not gonna do that. So when you master your craft, is you learn so much about what you can do and what you can't do, that you're doing it kind of like not even without even thinking about it. So when you master your craft, that's when people have their most success, and and they're basically the most successful investors, is because they mastered what they can and can't do. All right, and then last but not least, so I know a lot of people want to make money, and like they understand that it's like important, to be profitable and stuff like that. But you gotta always be aware that if you can't invest, don't invest, and if you can, then invest. But capital protection is a lot more important than losing money. So you gotta always be aware of that, and you gotta be like haris, and you gotta have that protection within yourself. So you gotta always protect your capital rather than wasting it. So you gotta be make sure that you have three confirmations. And so moving on from that, three confirmations are very important. So what three confirmations are is that you have three indicators, or three things that follow your trading plan. That okay, say I'm not gonna buy anything if the relative strength index is below 30%. So if the strength index is below 30%, that's one confirmation. And then say my second confirmation is I'm gonna buy it if it's at a certain support. So if it's at a certain support, that's my second confirmation. So three confirmation is basically three things that you have written in your trading plan that follow that certain stock that you want to buy. So if it's at a certain stock, so that's when I say like you don't want to go out and look for the certain stocks. you want the stocks to come to you. You kind of want to, before you ever invest in something, you kind of want to see the direction that is going before you invest in it. So you see like a new pharmaceutical stock that just came out. It's like, oh, they're helping with technology of making it cheaper, and it's like a lot of pharmaceutical companies, they are good, but usually some of them, like, they don't have a lot of room for growth. So what you want to do is you could like put it on your notifications, or you can put it on something like that, and you can see how it's moving. And you know, if it's too late and the surge happened before and it's been moving up well, and you got too late to enter, then that's fine. But you also got to understand that it's better that you saw it grow and you made the right choice, rather than it buying into it without thinking about it and losing capital off of that. So always make sure to capital protection and the three confirmation rule. All right, and then last but not least, what I want you, like, what I am and what I want you guys to be looking at around is there's a lot of opportunities that should come soon, and that should be areas like soap companies and disinfection wipes, like companies like that are good opportunities, because a lot of them are selling out, so they're gonna up the production. So when they up the production, that means their growth is gonna exceed in that case. Also, delivering companies, those are going to be important. UPS, FedEx, they're all going to have good opportunities with that. And not just that, also applications let's say not necessarily like Uber or something like that, but like maybe Uber Eats, maybe like DoorDash, maybe like stuff like that. A lot of people are going to be wanting to have food delivered to them rather than them going out and getting food, right? So those are going to be good opportunities where they're going to probably be hiring more people, and they're probably going to be getting more businesses. And also, like I said earlier, Amazon and wholesale and big retail stores. Those are going to have good opportunities just because a lot of their stuff are selling out. So they're going to up the production. They're going to up the more people that are going. So you got to always make sure that you're making the right choices, and that you got to think about what investments are going to be good and what have potential growth. So you got to always back test that. So I'm pretty much done. I wanted to show you guys more on this, but I can't really. It's not letting me. So I guess inshallah next time. But Mohammed, if you would like to add anything, that'd be perfect.
Jazakallah khair, Karim. Great overview. So to summarize here a little bit what Karim shared. So he talked about, first he shared this website, babypips.com. It's new to me, so I learned a couple of new things here. And he talked about being laser focused and how you want to focus on the charts and following where it's dropping and the lower high concept. And you can learn more about charts if you just go to Yahoo Finance. If you type finance.yahoo.com, they have also some good overview of financials and charts and things like that. And then Karim talked about the Forex market, which is the foreign exchange. It's a $5 trillion market. That's huge. I really enjoyed how you talked about the cicada and the Indonesian currency and soybeans and all that. I never really got too much into currencies and, never even considered trading them. But maybe now that you exposed me to this, I'll start digging into it a little bit more. He talked about point and percentage is what PIPS is about, and he shared the educational curriculum they got there. So if you guys are interested, you can explore that a little bit more. The tradingview.com website and cryptocurrencies in general. I think this is definitely something worth at least learning about, if not necessarily investing in. But obviously, in the older days, people did not have currencies. They used to barter and exchange goods and whatnot, and then they came out with gold coins, and then those changed to other types of coins, and then paper, and we moved from paper to electronic, to like credit cards and stuff like that. And today we do a lot of things electronically, and even unfortunately some markets, or most of the world, uses what we call derivatives, which is not even real money. And that was part of the collapse of the financial market in 2008. But it's important to be on top of these developments. Like cryptocurrency, not only is it an electronic currency, but it's also moving the power of issuing currencies from governments to people. And that's in itself a very empowering concept, and that's one of the reasons governments are not too excited about it. But I personally think, I don't know if it's going to be in my lifetime or not, but it's something that's going to grow someday and have some real economic power. And then Karim talked about journalizing, thinking also like a bank, right? So you want to think like an investor. Um, uh, Meaning you're looking at the bigger picture, and you don't want to trade with emotions. You want to trade with facts. So you want to look at charts and indicators. And he talked about how you have to be careful with a preservation of capital, meaning you got $1 that you're investing and it's bringing you five pennies. So it's $1.05. You want to protect the dollar, and maybe be more lenient or risk taking with the 5 pennies that you kind of earned. He mentioned the 3 confirmations rule, which I'm sure he'll talk more about in detail, but the bottom line is there's indicators that you want to look at. I don't know if you heard of Interactive Trader, Karim, that website, interactivetrader.com. I've used it a few times. They have a nice breakdown of markets by industry and segment. So for example, it would show you technology and how it's broken down between hardware, software, media, and then each segment within those are broken down further. And it gives you a color code map of which segments are kind of weak and which are strong. But the point Karim is making here is there's some science to this, guys. It's not, we're not gambling here. There's science to this. There's indicators, for example, insider movement, who is buying and selling stocks, what is the profitability of the company and the stock, what's the cash flow. There's a lot of things. I can actually show you here what it looks like. Let me bring it here, share my screen. So let me know if you can see the screen.
I can see it.
You can see it? Okay. So this is what one of their main pages looks like. Here you're seeing different stocks, Facebook, Texas Instruments, Amazon, Apple, and so forth, Microsoft, Juniper. And here you're looking at an industry like this is the whole S&P 500. Here's technology. You can click on technology a little bit more and look into, software. It would show you within software, Microsoft is red, Oracle is green. So Oracle is doing good. Out of the entire group here, you can see Oracle is one of the better ones. You can go back to technology and look at hardware, double click on that, see the hardware companies. You can look here at this company, what they're doing. You can look at the whole S&P, and I think you can change these. I don't use it that much. Industrials, healthcare, like Karim was talking about, detergents, and I think those would be under consumer,
Yeah, I think consumer.
cyclical.
Yeah.
Yeah, so restaurants, retail, it's probably going to be under retail maybe. So if we click here, companies like Clorox and Procter and Gamble, I think those are the companies that do soap and things like that. But yeah, so these are some of the tools. But again, if you look, this tool, for example, the indicators that Karim was talking about here, they go by these four indicators. So fundamentals of the company, like if we click on Facebook and look at it in detail, so fundamentals are things like sales, assets, equity. How much sales is it doing? Does it sell products or not? Does it have assets, buildings or property? Equity, meaning stock, and then their income. So Salesforce, you can see Facebook, they're green in all those areas. But when it comes to, I think this is insider trading. Yeah, you find a lot of people are selling their stock internally. So all these officers who work at Facebook, they're selling their stock. So something is going on, making them a little uncomfortable holding on to it. They might know that, in a month or two, Facebook will lose some money. So if you find a company that there's a lot of insider sale versus insider buy, then you want to be a little cautious. And then this third indicator here is profitability, profit to equity, a price to equity ratio. So the price of the stock compared to its value in the market. Price to cash flow, so the price of the stock, the share, compared to how much cash it brings in, earnings and things like that, and sales. Projected price, so that's another indicator. And then lastly here, we looked at growth, is the one at the top, which I think is the stock, the shares itself, the price, right? And these are the candles that Karim was talking about. In this tool, they give you different types of averages to look at, and if the curves are not going up, you know, you want to be careful, things like that. So I'm not an expert in this, but I've been kind of exploring some of these things. Anything here, Karim, you wanted to add?
Yeah. Usually, like, so like these lines that you were talking about, like these are the exponential moving averages. So like, usually when they cross, like as you can see, the yellow and the blue line they crossed, in the when they crossed right here in the middle, right in the middle, that's like when it like dropped a little bit, and then it crossed back and they started moving up again. So like those are also like certain patterns that you could like follow with like with the exponential moving averages and stuff. And like these are just like only like a little bit of like indicators that show like what like you can see that are like factual like facts of like when it as is at a certain point, then it has to like determine to go up, because they can't really the banks can't like drop the price any lower because it's now at a healthy point. So now it goes up and the sales are going back to normal again. And like also like this is a very interesting website too. Like I like I'm definitely gonna look into it, and I appreciate that you sent it out.
Yeah, no problem. All right, so let's open the floor for more questions, and I have a couple more before we close. So let's go around, see if anyone else had any questions.
So,
All right.
can you guys hear me?
Oh yeah. Go ahead, Adam.
S- all right. Okay. So, I remember in the past, we talked with you about Wahed Invest, right? And how you they you give you your money, they invest in halal companies, they take out companies that or they don't invest in alcohol or anything that isn't allowed. So, how like do they pretty much just do they pretty much look at everything and they do it for you, right? Or am I wrong?
Yeah. So Halal Wahed Invest or Wahid. They, as you see here on the screen, they say Halal Investing Made Simple, and you can read a little bit about them, what they do, and they call it ethical investing. So they don't invest in companies that deal with businesses that are haram, like pork production or liquor, things like that. Uh, Also, they probably exclude guns and weapons and you know the likes. Um, Also, they probably some organizations, and I think these as well, look at the debt to equity ratio. So companies that have a lot of debt, meaning they borrow a lot of money to conduct their businesses, they would try to stay away from. Um, but yeah, that's kind of, you know, I don't want to speak for them, but you can read here more and see what exactly their philosophy is and so forth. They do have 4 or 5 different types of ways to invest for the aggressive, you know, very conservative and so forth. They invest in stocks, what they call sukuk, which are sort of like Islamic bonds. They're usually overseas, so they're in the international market. Like you can see here, there's a Sharia ETF as well, and sometimes in gold stocks, gold companies that do gold exploration and excavation and things like that. Um, and obviously, they take a commission out of it. As you saw in the previous slide or screen, you can invest as little as I think $100. So if you put 100 this is what you expect to get back in a year, about 1%, which is not crazy. If you put 100% in an Amazon stock, probably over the course of a year, you get, 5, $10 back, 10% or so. So obviously they're a little conservative, but because of the nature of the way they invest. And I think in this market that has crashed, they probably are doing pretty well because of the big part of the sukuk that they invest in, which is more stable. Good question. I don't know, Karim, if you know about them, anything you want to add?
No, I mean I don't really know about them, but it definitely seems interesting. They like it's basically like a user friendly interface that's created to make it easier for everybody. That you know, 'cause, like not everyone is gonna be an investor, so basically this is like a platform made for people that want to let the people do the work for them. You know, so it's I mean it's definitely an interesting opportunity for sure.
Right. Yeah, I think exactly. This is, I would say this is more suitable for people who are 55 and above or in the retirement. They don't want too much risk. But for young people like you guys, you probably want to explore the stock market and platforms like the one we were looking at and, dig deeper into things. There are other also opportunities in the Islamic financing. There's mutual funds like Saturna Capital. Saturna Capital, they are the custodians of Amana funds. Amana is one of the best performing Islamic mutual funds. Um, they manage funds for other people as well, but I think Amana is their biggest. You can read more about it here. Amana funds at the bottom. You can get Amana funds from most brokers today, Schwab, E-Trade. They're sold on the markets across the globe. But they've been doing pretty well, very close, if not better than S&P 500 and so forth. And like Karim was saying, they do most of the work for you. So here's one of their portfolio, the income fund. These are the top 10 companies by percentage of the portfolio. And then here's their 10 largest that they've sold out and the top 10 holdings. And um, they're I think they have their investment, what do they call it, return on investment on another chart. But you can learn more about these things. This is another way to invest passively. So you can put every month $20 into mana funds, and at the course of the year, if you download their PDF, you can read more. Over the course of the year, you make 8 to 10%, which is on average not bad at all. They have different ones: the growth, the income, developing world, and participation. Obviously, if you trade yourself, like what Karim was explaining, you use these kind of charts yourself. You have more control on your investments. You can sell and buy quicker and move things around, under your control. There's obviously also a little bit higher risk because you have to be on top of it. So if you're busy, 1 week with school exams and the market happens to take a hit and you haven't set your sells or buys, then you're kind of a little bit, in a bad spot. But at the same time, it might be cheaper because these other places will take some commission because they're doing work for you. So, it all has pros and cons. And I think overall, what Karim shared today is a great introduction into, stocks and currencies in general, and how to explore other ways to make money and just be active in the market and play a role in things. So great. Any other questions? All right, wonderful. Well, Jazakallah khair, Karim. Beautiful. I learned quite a bit today. You got me a little intrigued here and excited. So may Allah reward you for sharing your knowledge. And inshallah, I hope we can do this again. We'll do a little survey after this and see how many people are interested in another session and taking this forward, inshallah. But I think it's, if anything, at least an area that we just need to be knowledgeable, even if we don't trade or do active, investments. All right, with that, I'll turn it over back to Karim to help us close here, inshallah.
All right. Thank you for taking your time and listening. Just wanted to say one thing. uh, it's never hard to stop learning. It's never too late to stop learning. You have to always learn, and it's never nothing bad about it. So even if you can't invest, it's always a good skill to even learn just to have for the future, or an opportunity that you see that you might just come across without even thinking about it, and it could be like an opportunity of a lifetime. So so always be aware and always increase the amount of skills that you have, because the more skills you have, the more inshallah success and knowledge you will take in the future, inshallah. So yeah, that's pretty much it. Thank you for taking your time and listening. Alhamdulillah.
Jazakumullah khairan.
Hi.
Assalamu alaikum.
Wa alaikum
Assalamu
salam.
alaikum.
السلام عليكم.